So, you've probably seen these day traders, and you've probably watched some of their videos, right? Now, they're not telling you the truth. And what they're not telling you is they continue to promote prop firms so that you buy accounts using their code where they make commissions off of. And what they're not telling you is that they're using unregulated brokers so that you can use them too, and they can make money off of that as well. But what if I told you there was a way that you can make money day trading with a small account, live capital, without using a prop firm, and having an 80% win rate? What if I told you there was a way to actually understand how the market moves instead of just using these broken strategies where they don't even give you actual entries or exits to? Now, this seems impossible, and at this point, you've probably been sold this dream that day trading is glorious, wonderful, everything you could ever imagine, right? But I'm here to sit down and give you the real truth about day trading. It is not. There are so many hard times that you're going to go through when you day trade. You are going to hit so many walls. You're going to want to quit. You're going to want to give up. And that's just how it goes. But I was once in your shoes. I was a person sitting in the back of a classroom, losing $500 on a trade, pretending I was taking notes. I was the person who was always worried about having enough money. I was the person who was always feeling useless, feeling like I'm not enough because of how much money I lost in the markets, feeling like I'm a total loser because I've fallen into this trap of day trading and it's not even going to work out for me. Let me tell you, it did work out, and it worked out for the frickin' best. I found total freedom within day trading, and not to say it was not easy. It took me years. It took me years to understand how to become a profitable day trader. Mind you, I never had a mentor. I was sitting listening to the same people you probably were listening to as well. I was watching YouTube videos just like you're doing right now. I was buying courses just like you're doing right now. And I only became profitable when I actually realized what I'm doing wrong and that something has to change. And if you're watching this video, you need something to change as well. And I know that. So I'm going to give you the full truth, my strategy, why I've been able to be consistently profitable and succeed at trading. Because I know if I was once in your shoes, I know if my mentees were once in your shoes and I've helped them scale accounts, I grew my own account, then you can do it as well. But you can't give up, and you have to understand day trading is not a get-rich-quick thing. Day trading is not for someone who is just easily going to give up at it. So you have to promise me you're going to stick through, you're going to take notes throughout this whole video, and you're going to listen to me. But let's get into it. But before we do get started, I find it very important to actually give you guys proof of concept and show you guys some of my students. So my one student named Evan, back in May is when he initially joined my community, and we created a 3-month plan together. I talked him through it, and he used to be a heavy gambler, ended up, losing a lot of money with trading, and decided to join my Discord. After I gave him the 3-month plan, just a month later, this is what he was able to accomplish. A month later, he was able to actually see the progress. And these are just a couple more of my students as well. They're hitting insane green weeks. They're having awesome times, and overall super proud of them. Just a couple more of my students as well. And then the most important part for me is showing proof of concept of myself. So this is a broker statement from the past month in August. As you see there, I had to white out my address and my account number, but yeah. So now we shall get started. So listen, most traders don't fail because they lack effort. It's because they've been fed broken strategies, random alerts, and courses that just don't help. So that's when I created my 4-step process called the Freedom Framework. It's the only system that flips the narrative and gives you real results. And no, I'm not teaching you bullshit recycled ICT or some breakout strategy that only works in a bull market. I'm showing you how to use this process to become independent and work on your own time. Every step is equally important and only works if you use them all together. So make sure to take out a pen and pencil and get to writing notes. Now, on to step 1 of the Freedom Framework. Trading has no ceiling. The scaling possibilities are absolutely endless. And here's the math to back that up. If you start with a $1,000 account and make 10% of that weekly, which is just $100, you would have $98,000 in a year. And that is just growing linear. If you're compounding your growth, that would be $142,000. So, let's do the math. Let's say per trade you risk $20 to make $40 on a $1,000 account. You would just need 3 winning trades a week to make that 10%. Even if you lose one trade, you would still be making close to 10%. And in comparison to something like e-commerce, with e-commerce you spend $500 in comparison to e-commerce, to make $160 profit, you'd probably need to spend $500 on ads, deal with 20 orders, and pray that Amazon doesn't copy your product. In trading, 3 trades, that's it. 3 winning trades a week that took less than an hour, and you have the same $160. So the one lie is you don't need a huge account. You don't need to spend all this money on prop firms that don't even guarantee a payout. Small numbers grow big if the system is right. Now, before we get on to step 2, this is a secret traders will not tell you. They always say use this strategy or use this indicator, but they don't show you how the market actually moves and how to know when to trade. This is the reason 95% of traders lose. They have a strategy, but zero understanding of market context. A choppy market is exactly what will kill your account. But how do we know when the market is choppy? Well, it's quite simple. Look at the context. Do we have big news coming out? Are we stuck between a $2 range? This takes traders out, destroying accounts in less than an hour. And the market spends most of its time going sideways, faking people out and punishing impatience. One bad move, and it'll just wipe out a week of gains in an hour. For example, look at QQQ during big news. We get a huge move down just to come right back up. While breakout traders are shorting, the pros wait for this real move. Now, you may be thinking, well, I'm busy. I don't have time to sit here all day staring at charts. Good. You shouldn't be. Trading shouldn't be more Good. You shouldn't be. Trading shouldn't be about taking more trades. It's about taking better trades. And you just need 2 to 3 higher quality trades a week. Less volume, more quality. And this is where almost every other trading room or Discord fails you. They'll spam alerts all day. Buy this, sell that. But they never teach you the one thing that actually saves accounts. Knowing when not to trade. Because if you only focus on entries but never master patience, you'll always bleed and chop. That's why people cycle through alerts, discords, and courses, but never make any money. What I show you is how to filter through all the bad trades, avoid the traps, and only strike when it's worth it. Now you may be thinking, well, I'm busy. I don't have time to sit here all day staring at charts. Good. You shouldn't be. Trading should not be about taking more trades. It's about taking better trades. You just need 2 to 3 high quality trades a week, less volume, more quality. As we see here, the same trader who's trading ICT or breakout or scalp trading has taken 50 trades to make the same amount of profit as you. Someone who uses a real process with real framework is only taking 3 trades to make literally the same amount. Way less time, way higher quality. And this is where almost every other trading room or Discord fails you. They'll spam alerts all day. Buy this, sell that. But they never teach you the one thing that actually saves accounts. Knowing when not to trade. Because if you only focus on entries but never master patience, you'll always bleed in the chop. That's why people cycle through alerts, discords, and courses but never make money. What I show you is how to filter out all the bad trades. avoid the traps, and only strike when it's worth it. Now for step 3, the section I know everyone's been waiting for. Let's get into my strategy. My strategy is so simple, anyone can do it, from beginner to advanced trader. It consists of using support and resistance levels with supply and demand zones. But the most important part is the Sophia entry model. While other traders will only tell you half their strategy and assume you can guess where to enter, I'm actually going to take you through mine. Most strategies fire off 10 random trades a day, and maybe 3 out of 10 work. With my entry model, I have an 80% win rate. I take 1 to 2 trades a day, and I don't get a headache from looking at the charts. Other strategies are playing poker blind. They push chips in every hand, hoping luck saves them. Most of the time, they lose because they have no edge. So let's get into it. For example, I use support and resistance levels as my main key levels to trade with. Now, you may be thinking, what the hell are those? So a support level is actually going to be pretty similar to a floor. It's going to be a price level where anytime price trades into it, it immediately gets a bounce. It gets stopped at the floor. And vice versa with a resistance level, but it's a ceiling. Anytime price trades up into that ceiling, it immediately rejects it and rejects that price level. And I'm going to take you through exactly how I find these and use them on the chart in just a second. But let's also go through supply and demand zones. Supply and demand zones are another strategy that I use with support and resistance levels, and it's pretty similar. So that demand zone in green is similar to a price floor, but it's an entire zone instead of just a singular price level. And it's a zone where price trades into and gets a bounce immediately from there because there's so many buyers that step into that area. And same with this supply zone, just vice versa. Think of it as that price ceiling. When price trades into that zone, it will reject it because there are so many sellers that are defending that level right there. But let me take you to the chart and show you exactly what I actually mean. All right, so let's go through the process of actually marking out these support and resistance levels and understanding how to use them. And after that, we will go through using supply and demand zones. So the first thing that I do is I go to the 1 hour chart. So currently, as you see right here, I'm on the 1 hour chart, and you can also use the daily and the 4 hour chart as well. But with my day trading, I will only use the 1 hour chart. So marking these support and resistance levels are generally really easy. It's just areas where you've seen these candlesticks react off of price multiple different times. So a lower level is going to be called that support level. It's that price floor. And the upper level is going to be called a resistance level. It's that price ceiling. So let's go ahead and mark out a couple. One I see up top right here is on QQQ at this 602.67 area. So that is going to be our first point of resistance. That is where we've seen multiple candles touch into this level and get a rejection off of there. Now, the next area that I like as a support level is going to be down here at 594.58. We've seen price hold above this floor multiple times. 1, 2, 3, 4, 5. 5 different times we've had candles holding up this level right here. Now, you can take it a step further and mark out some more levels in between the zone that we have marked out, since it is about a $5 range. Now, one area that I particularly like is going to be this range at 606, because we may have broken above it, but we have seen multiple rejections off of that level. So I really like that one. And let's go ahead and color the support and resistance levels different colors. So for our resistance levels, they are going to be green, just to make it a little bit easier for us. And then our support levels, we'll just leave purple. So now this looks pretty perfect to me, and I could probably mark out one more range or one more level, which was support, but it has now turned into resistance. So we'll mark out this area right here. and that is our resistance level, and then we'll mark out another support level down here, which one that I really like is going to be at this area where we've gotten multiple rejections off of as well. So we are going to color that one purple. Perfect. So now we have all of our levels right here, and as you can see really clearly, price has obviously reacted off of these levels, and you might be thinking, this doesn't really mean anything to me. Like, what are you showing me? We're going to get to that because this is exactly what I use to take my trades. Now, let's quickly move into the 30-minute time frame. So you can even see these levels much clearer on the 30-minute time frame. But what we're going to do on this time frame is mark out some supply and demand zones. So like we said before, demand is going to be that price floor hand in hand with a support level. And supply is going to be that price ceiling hand in hand with a resistance level. So if we take this rectangle, and again, this is a whole zone instead of one specific price level, and we will end up marking out this bottom range where we've seen this stock QQQ get a bounce from multiple different times. It's reached into the zone and gotten a bounce multiple different times. Now this is about over $1 range and zone, which is great. That's where we want to see our zones. And how to confirm them more is we see it close outside of demand, it gets a real bounce, but we confirm it with our support level. So does it still close above our support? If yes, these are zones in a level that will hold up. Now, let's color this purple to not get confused because our resistance is obviously green. So that is a first demand zone right there. For our supply zone, one specific area that I've seen multiple times get tapped into is going to be right over here. So we have this pretty obvious zone, and we obviously need to color that green, and there we go. So we have this supply zone where we've seen price actually get rejections from, and then trade above, and come back down, and actually continue to get bounces from it until breaking it, and then we got that rejection right there. So this still holds as a supply zone now. And there's a couple more supply zones that we can mark out as well. We can mark out one right here where we've seen price hold, and we can mark out one right here as well. So easy enough, right? You just want to look for points where price has reacted from. We've seen price react from these areas. They've either gotten a rejection off of a specific resistance level or that ceiling, or they've gotten a bounce off of that specific support level. Now, let's get into actually how to enter these trades and the types of setups that I use. So now that you actually understand how to take support and resistance levels in supply and demand zones, and now you actually understand what they are, I'm going to show you exactly how I use them to enter my trades, and this is called the Sophia entry model, my exact entry filter. So the first step is going to be drawing out and taking your levels and zones. So you're going to be taking your support resistance levels, supply demand zones. That's going to be your first step. Pre-market, that's exactly what you're going to do to get you prepared. Now, your next step is determining what type of setup Now your next step is determining what set Now our next step is determining what type of setup we're actually going to be taking. And there's 3 types of setups. There's the first one called the break, the second called the bounce, and the third called the reject setup. And I'm going to take you exactly how they work on the chart. So let's get right into it. The market quite literally gives you 3 types of setups, and I'm going to show you exactly what they are right now, instead of your other mentors who just give you a strategy and don't actually tell you how to enter, what their entry model is, and leaves you completely blind. I'm going to show you exactly how to take these entry models. So our first one is called the break. So what you want to do is we are going to draw two lines, our support and our resistance lines. So for example, this line down here, which we are going to color blue, that is going to be our support level, and our line up here, that is going to be our resistance level. So as we already know, a stock is going to trade in between these zones. But what happens when we break a level? Because that is always possible and very likely. So I'm going to show you exactly what happens if we do break a level. Let's say, for example, we also have a supply zone up in this area, and then we also have a demand zone down in that area. So now we want to color this one. We'll also do blue right there. So that is going to be our little setup. And what I'm going to take as well. So we're actually going to be taking our little paintbrush here, and instead of me showing you candlesticks, I'm going to show you this in an extremely simple way, and then we're going to actually go through and backtest a real live day of using this strategy. So let's say, for example, we have a stock and it is trading in between this range and this area. So now that we have our first setup, what I'm going to do is take our little paintbrush and I'm going to show you in a very easy manner without using any candlesticks. We're just going to be using a simple drawing tool to understand how this first setup will work. So let's say, for example, we have a stock and it is trading in between these ranges right here. And it is kind of just bouncing off and bouncing off. And what happens when we come back up and we end up breaking above this level right here? Now, the same scenario could happen as we saw right here, where we did break above it, but we didn't end up actually holding because we have the supply zone up here, but we tapped into it, making it a bit weaker. So now the next time around, when we come back up, we actually break through there. And what you want to do is you want to wait for confirmation. And I will talk more about this when we get into real live examples of trading these. But one way that you could take this is, for example, so now we are heading upwards, and let's say we do end up fully breaking above here. What you would want to do is wait for confirmation. So you would want to see a 5-minute candle close above this level right here, signaling to us that we are going to break through there and get a continuation up to our next level that we have marked out. So this is going to be our break setup. So what you would take from here are some calls. You want to continue with the trend, continue with the upside volume. So that is how we are going to take it. Now, our next setup is going to be the bounce. So for the bounce setup, we are going to continue to make the same levels. So we'll make that upper level and we'll make this lower level down here. And we will also make sure to take our supply and demand zones as well. So we got a nice supply zone up there and we got a nice demand zone down here as well. And what I'm going to do is color this a whole different color, and we'll color this line down here a different color to signal that this is going to be our support area. We have our demand zone and we have our support level. Up here is going to be our resistance level and our supply zone. So with this setup right here, what we want to see in technical terms is going to be a bounce on this support area, this support level. So this is sort of building onto this break strategy, but this would just be a different way to take this sort of setup. So what I do want to see is, again, going to be a stock, trading within this range, and we actually get down to this level, and what do? Now from here, what I would want to see us do if I'm looking to trade a bounce on our support level and through that demand zone, a bounce on that demand zone, what I'm going to look for is price to tap into this level. I'm going to wait to see confirmation of us holding above, and I'm going to wait to see a 5-minute candle close outside of this level right here. So outside of there, I'm going to wait to see that 5-minute candle close, signaling to me that we are going to get a reversal. We're getting the bounce on our support level. and then I'm going to look to take profits at our next area, which is going to be this resistance level. So right there, I would be looking to take profits out. Let's erase that because that was ridiculous. But that is going to be our second setup. And again, this is easy enough. This is pretty easy. So I'm telling you guys, you don't have to worry too much. Now, for our next setup, which is going to be the reject, let's move this over a little bit. So we're going to want to draw the same exact lines. And again, the reject setup is something that is quite easy as well. And I'm going to make sure to draw them like this. There we go. So we have our resistance level right there. We got our support level down here, and we'll color that one greenish. And then we are going to get our supply zone up here with our resistance, and we are going to get our demand zone down here with our support level. And let's color that purple. So for our next setup is kind of how it sounds. It's going to be a reject. I want to see a reject on our upper resistance level. So again, once again, let's say a stock is trading within this range, and we're kind of trading, and we come up to this level right here. Now, obviously, you don't want to take a reject just because we tapped into the level. Like I've been saying for every other setup, you want to wait for confirmation, because in this scenario, the same thing could happen over here, is we break through our level. But what I do want to see is that entry confirmation. So I'm going to wait for the 5-minute candle to close below and out of here. So now that our candle is closed right here, I would take my entry, and where I would set my take profit is going to be at our support level and in this demand zone. So quite simple, quite easy enough. And same goes for the break setup. You could also break below a level. It doesn't just have to be that we break above our resistance. You could also get this same case scenario like this, and we come back down and we end up breaking through our level. So just wanted to make that clear for any of my beginners watching. But these are going to be our 3 types of setups. We have the break, we have the bounce, and then we have the reject. Now, there is a 4th setup that I do have to warn about. So let's go ahead and let's delete all of these. The 4th setup that I have yet to show you guys is quite the simple setup. But you have to take into account that you have to understand when we see this sort of setup. So, for example, once again, let's draw out our lines, our support resistance levels. And this setup is quite unique because this setup is what knocks out a lot of traders. This setup is what blows a lot of accounts. So let's say, for example, we come in and we don't really tap into any levels. And this is how the market looks kind of all day. And just what I talked about in our step 2 of the Freedom Framework is a choppy market that will take out traders. This choppy market will take you out if you're trading in between these zones. You want to see clear taps into either our support, into our resistance, or clear breaks above or below these levels to take your entry. The only reason that you would be trading within this choppy range is because 1, you don't understand to not trade within there, and 2, you do not understand what a choppy market looks like. So that's why I'm going to show you exactly what it looks like. But those are going to be our 3/4 setups that we have, and I'm going to take you through one right now, and we are going to backtest the live chart. Let's get right into it. So I've now picked out a random date on QQQ, and this date is Tuesday, September 23rd, and it is currently pre-market on our backtesting. So what I'm going to do, and I'm in the 1-hour time frame currently, is I'm going to take some support and resistance levels. So for our first level is going to be this all-time high on the stock QQQ. So I'm going to take this right here, and that is going to be our first resistance level because that is the all-time high. That is the highest point we've seen in the market. So there's no other resistance levels above here that I can mark out. So that is our resistance level right there. Next, for our support level is going to be this range right here. It's going to be this low candle wick that we see right there. That is going to be our support at that 601.20 area. Now, I actually do like a demand zone that is within this range right here. So I'm going to mark this one out as well because we've seen multiple candle wicks into there, and this is going to be our demand zone. Now, for supply is just going to be pretty straightforward. It's just going to be up here, and we will color that green. So this is currently what we're working with, and if we go into the 30-minute chart, we can even get a clearer view on those zones right there, and that is pretty perfect to me. So what I'm going to be looking for this day is either to see a reject at this upper level right here, or is going to see a break below here, or a bounce right here. So if I do see a break above here, I'm not looking to trade that because, again, we're at all-time highs. So I'm not looking to trade above here because I don't know exactly where price can go since I don't have any levels that I can mark out. So let's just skip and go into near market open. So we are about 5 minutes from market open. So I'm going to start playing and seeing where I could take a trade and where it could play out. So currently the first candle is downside and same with the second candle. And there we have it. We are already tapping into this first support level. So now what I want to see is either us break here or get a strong bounce, which is going to look like a strong candle up. And if I do not see that, I would not be willing to take the bounce and I would just wait it out. So that's the first candle we get, which is still a bullish candle. But as you can see, it's very indecisive. It has these long wicks to it. So it's not a candle that I would want to be taking a trade off of. So let's continue. And we see this first candle breaking our level, but no confirmation there just yet. Now for the second candle, we've actually now broken through our level, but what I am going to wait for, since this price action does seem a little unsure, is going to be another retest up into these levels right here. So we get that other retest, but this candle is still not giving me the confirmation that I want. So I'm going to wait it out. And as we see, we get another candle up into there because we haven't fully broken out of our strong demand zone just yet either. So we are going to continue just waiting patiently. And no, I'm not going to take this bounce from here. And there we have it. We have another bearish candle breaking, but then we have a bullish one. So are we getting chop? Potentially, but let's see if we could take a trade. So currently still getting some downside movement, and this candle looks great to me, but I'm not going to take the trade from here just yet. I'm going to wait until we actually see real move down. That's another good looking candle, and let's see it. That candle is not my favorite, so I'm going to play another one. And we continue to get a little bit of choppiness. So obviously we don't exactly want to break through this zone just yet. And we want to keep trading in between here. So now that we have this candle, which is kind of signaling something big to me, and that reason being is because we tried to make this high right here, and we obviously couldn't. We obviously couldn't break out of this recent high candle wick that you see. And now we are holding below our level. We're breaking out of the demand zone to the downside. So what I'm going to do is, technically, if you're trading options, you're going to be buying puts. But unfortunately, I cannot replay myself buying options contracts. So I'm going to sell my contracts and I'm going to short QQQ. I'm going to put my stop loss above that recent high. And I'm going to put my take profit at my next level, which is going to be at this 9,597 area. That is going to be my next level down because it's just a range that I had already marked out previously. So I'm going to confirm that, and let's start playing into this trade and see what happens. So we do get a little bit more upside, and then we start to get this downside movement. And let's see if price still continues to chop. And we finally do get that downside, and I end up hitting my take profit. So sometimes you just have to be patient. Sometimes you have to wait for the chop to clear out a little bit. And that's exactly what I did. I saw that nice bearish candle movement. I entered off of there. We got our downside, and that was a beautiful break play. That was a break on our support level, a break on this demand zone to the continuous downside into my take profit area, which was at that 597.50 range. So as we see right there, that is a perfect example of our setup. So now that you exactly understand our 3 entry models and our 3 setups, there's a couple more steps for you to understand, which I talked a little bit more about while I was giving you guys the presentation. So the next steps is step number 3, wait for price action confirmation and volume. And that's exactly what I took you through when we back tested that break setup. So what I waited for was that 5-minute candle confirmation close, and I waited for the correct volumes to start coming in. As we saw, sellers started to come in, and we got that downside move. Step 4 is going to be picking the right contract. So this kind of goes in between while you're about to enter and choosing the contract that you need to enter with. So just going a little bit deeper into that for my options traders, the contract that you want to pick is something that is closer in the money. For day trades, you want to not be buying too much time because you're just going to be wasting extra money, and those contracts aren't going to be as liquid and get much volume. So you want to be buying 0 dated, 1 day out, or weekly contracts for these stocks that don't have 0 dated contracts. And step 5 is just managing the trade, knowing where you're going to exit, like I already picked out as I entered, and I also picked out my stop loss as I entered the trade as well. So I knew exactly where I was going to exit if the trade, for 1, didn't go to plan, and 2, did go to my plan. I needed to know where I was going to exit. So you may be thinking right now, well, I'm new and I don't know advanced stuff yet. How could I trade with such precision? But it's actually really, really simple, and I just took you through it. Instead of chasing 10 different trades a day and getting confused, you just follow 3 easy rules. Is it a key level? Do we see volume? Is the market context correct? If all 3 are yes, then you're free to enter the trade. You just need to make sure to manage it. Even if you're brand new, you could check 3 boxes. I'm sure you can. But that's way easier than juggling 10 different indicators and testing out 20 different strategies as you're live trading the markets. So before we get into step 4, I want you to make sure that you understand everything. Make sure you're taking notes right now. But let's get into step 4. Now, step 4 is what really ties everything together. Above any strategy, if you don't understand how to handle emotions, you will never turn profitable. Trading is a you versus you game, one of the only games in the world where the playing field is 100% level. The same charts, the same prices, the same news, the same order flow, everyone sees it at the same time. There is no gatekeeper, no boss holding you back, no algorithm deciding who gets reached. The market doesn't care if you're 19 or 59, male or female, Ivy League or high school dropout. It only rewards skill, and if you have the correct process, you can win. And the biggest emotion that comes up when you're trading is going to be that quick dopamine hit you get after a win that wants you to keep chasing. After a loss, you get fearful and it starts to trigger survival mode. You hold losers too long, hoping it comes back because closing red feels like pain. And ego. After a loss, your pride kicks in. You revenge trade to make it back, which spirals into bigger losses. But instead of telling you to just be disciplined like every other mentor, everyone else, I have found 3 neuro hacks that trick your mind, but the biggest emotions that come up when trading is that quick dopamine hit you get after a win, which is that euphoria that makes you want to continue to chase. And then after you take a loss, you start to get fearful, anxious, and it starts to trigger that survival mode. You hold losers too long hoping it comes back because closing red feels like pain, desperation, and panic. And ego after a loss. Your pride starts to kick in. You revenge trade to make it back, which spirals into even bigger losses. But instead of telling you, just be disciplined, just get some discipline like everyone else does, I have found 3 neuro hacks to trick the way your mind thinks. So, getting into our neuro hacks, for the first one, you want to think in our R ratios that we talked about in step 1, not in dollars. Forget the dollar amount. Dollars are equated to emotion. Trade only in R. So, for example, let's say you have an account that has a $1,000 balance. You risk 1 R per trade, which is 2% of the account, which is $20. You want to buy a call option. The contract costs $1 per share, so that means one contract equals $100. If you buy one contract, you're risking $100, which is 10% of your account. Way too much. So to stay at $20 risk, 1R, you use a stop loss where you're only risking $20 of the $100 contract. So instead of thinking if that trade turns into a loss, instead of saying I lost $20, you say I lost 1R. Instead of saying I made $60 from my trade where I'm risking $20, say you made 3R. That way your brain is not attached to dollars. It's just thinking of it in units of risk. There is no dollar amount there. You're not hoping to make this many dollars in a single day. You're not hoping to make this many dollars in a single trade. You are just thinking in the R ratios. Now, for hack number 2, everyone tells you to journal your trades, and they're correct. But I know it feels tedious, and it does feel like a chore because I do it every single day. So think of it like a checklist before, during, and after the trade. Before, write down your trade plan like a grocery list. Example, I'm only trading QQQ at 9:30 and I'm going to be risking 1R. That's it. During the trade, check 3 boxes before you click buy. Do you have level confirmation? Do you have volume? And do you have context? If they don't all check, you need to skip the trade. For an example, SPY is at our resistance level. We have big candles with volume right at open, and that is our context. So we are going to be taking the trade. If that is not what we see, we will not be taking the trade. And after, what you want to write is just one simple line. Did I follow my rules? Yes. I made 2R on this trade, I made 3R on this trade, and if not, explain why you didn't follow your plan or what made your win turn into a loss. Did you chase? Did your ego get in the way? Or did you revenge trade? But that's it. 3 sentences a day to stop you from trading blind. Now for hack number 3, which is the simplest rule that saves accounts. If you're down 2 trades in a row, you're done for the day. Why? Because 2 losses, your brain isn't trading anymore. It's gambling. This rule flips the game. You're not the prey chasing money. You're the casino controlling risk. And the casino always wins because it knows when to shut down. So for example, if you lost $20 on your first trade, which is negative 1R, and you lose another $20, which is another negative 1R, stop and close the laptop. The game is over. You have now lost 2R in a single day, and you do not want to continue losing after that. But other discords and mentors just repeat, be disciplined. But discipline isn't about willpower. It's about systems. Willpower will fail you under stress. The system never blinks. That's why traders who rely on motivation always relapse, while other traders with instant kill switches and journaling evolve. One student I have only traded a singular stock for months on end. Some days he would not take a trade on at all because his confluences didn't align and all he did was follow the system. He never cracked under pressure or forced trades due to the system that is set in place. And being motivated is not enough to stay in the game. Building real systems with the real process is the only way to stay afloat while you're trading. So when you put all these pieces together, scalability, context, sniper entries, and the psychology systems, Trading stops feeling like random chance. It's no longer gambling. It's not you guessing, chasing, or hoping. It becomes predictable. It becomes repeatable. And if you follow the process, the outcome becomes inevitable. That's the difference between regular traders who bleed and us pros who actually print. And just in case you don't believe me yet, let's take it a step further. Most people who want to trade all say the same things. Trading is too complicated. I need a lot of money to start. I don't know what strategy to use. Thinking they need to watch the charts all day. And that's just the excuses I could think off the top of my head. The truth is, that is ignorance. If you want to be successful in trading, you need to remove the excuses that have been ingrained in your head. But before I show you the facts, I need to be real for a second. There are a lot of other business models online, and there are a lot of other gurus that lie to your own detriment. They tell you to start an agency, e-commerce, info business, or worse. Converse. But be sure But before I show you the facts, I need to be real for a second. There are a lot of business models online, and there are a lot of gurus that lie to your own detriment. They tell you to start an agency, e-commerce, info business, or worse, convince you to join their sales pyramid scheme. But because I'm not one of these gurus trying to sell you the dream, I come with proof, and let's break it down. Now, sales needs time and leads. Ecom burns thousands in ad spend. Info products, you need top level experience and to be seen as an authority. Trading, all you need is your laptop and a small account. That's it. But let's take it further. Look at this chart right here. Scalability with trading is absolutely infinite. With sales, you don't have as much scalability. E-commerce, not even nearly as much. And info products, you have a little bit more leverage, but trading is going to be infinite. For your upfront investment, trading, you do not need much of an upfront investment. $1,000 account can take you far. But e-commerce, again, you need thousands in ad spending. Sales, time and leads cost money. Info, funnels, ads, and production, that all cost more money, more upfront investment. Time commitment, trading. You focus on 1 hour a day and you take a couple trades a week. That's it. Sales, you're constantly picking up the phone with calls. E-commerce, you're babysitting suppliers and trying to nurture your customers. And with info, it's a constant content grind. Now, freedom, trading has no boss. Trading has no one to sit there and tell you what to do. You don't have any clients to manage. You don't have any customers. All these others, you are tied to clients, buyers, or algorithms constantly. And barriers to entry, well, trading, all you need is laptop and Wi-Fi and a small account. That's quite literally it. With everything else, e-commerce, suppliers, platforms, capital, sales, you need scripts, leads, team, and info, you need a brand and a production. So listen to me. If you're sold on trading and truly believe it's the right business model for you, that's perfect. That's where you should be. Now, I want to make the last thing clear. If you want to be successful in trading without 20 indicators, relying on callouts, and constantly blowing accounts, then you're going to have to follow my lead. But we will get to that in a second. But there's another chart that I want to dive into real quick. So let's dive into this chart I have up, and I'm comparing my strategy to others to give you a clear example of why I am successful and why my other students are successful using my freedom framework. So with ICT, you'll see here, it is not easy to learn. For anyone who's watching this who has tried to learn ICT, I have tried to learn as well, and I will tell you, well, it is not simple. Breakout strategies, very simple, very easy to learn. Scalp trading is not simple and is not easy, but my strategy, which I just taught you in full, is quite easy to learn. With ICT, you are going to have about a 50% win rate, which is not ideal. You will need to be taking higher frequency trades and need to be risking more on your trades. With breakout, you are going to have a pretty low win rate. And with scalp trading, you are most likely going to be unprofitable. But with my strategy, I stick with around an 80% win rate on all of my trades. Now, With ICT, it is pretty versatile, which is nice. But with breakout trading, it's not versatile at all. You're looking at one singular setup. Scalp trading is not super versatile. But my strategy, as I gave you 3 different types of entry setups, it is extremely versatile and covers all the 3 different movements that we see throughout the market. Now, for time cost, every strategy costs you a lot of time. You have to spend a lot of time watching the markets, doing your research. With my strategy, again, it is super simple. You do not have to spend much time, and I encourage you to only be taking 3 trades a week while using it. And with ICT, since there are so many different add-ons, there's so many different indicators, the stress is high. You don't actually know when to take your trade. With breakout trading, you have minimal stress, but you also have to be worried if our market is not in a bull market, you're not going to get breakout setups. In scalp trading, well, scalp trading has to be the most stressful there is. Scalp trading consists of taking numerous amounts of trades every single day, trying to catch all different types of moves to make a couple dollars. And with my strategy, again, very stress-free and very simple. Now, for scaling, with ICT, of course, you can scale accounts, but with this 50% win rate, it does make it harder to scale accounts. For breakout trading, you're not going to be able to scale too much. You have about a 30% win rate with breakouts. This strategy only works maybe 30% of the time, depending on what market we are in. So you can't really scale too far with it. And with scalp trading, you're not going to be scaling because you're going to be too busy taking a million different trades. But with my strategy, it is quite easy to scale, as I already showed you the math previously. Now, it's time for what you've all been waiting for. You need to make a choice. Stay where you are, or you could take the risk. But here's the thing. I'm not going to sit on this YouTube video and pitch you on a course or mentorship. While they are available, and I do get the most joy from seeing people like you succeed, so I took everything about my strategy and everything I've learned over the past 5 years of trading and compiled it all into a slideshow document, and I'll walk you through how to get that in a second. But first, we need to make a promise, because my current clients are not going to be happy that I'm giving all this stuff away for free. So please just promise me you won't tell them. All right, enough of that. But if you want access to this slideshow document, in the description at the top there is a link. Click on that, watch the video, and fill out the simple form. And bam, it's in your inbox. So good luck. I'll be in touch. See you on the other side. So now that we've been able to go through everything, I'm sure you're feeling absolutely wonderful, glorious, amazing. But here's the thing. You either can continue to sit exactly where you are, or you can take the risk. Now, I'm not going to sit here on this YouTube video and pitch you on a course or a mentorship. Now, those resources are available, but I don't really care. I get the most joy from seeing people like you, who I was once, succeed at day trading instead of just giving up and saying day trading is a scam and it doesn't actually work. I hate to see that. I hate to see people who are given up on. So what I'm going to do is send you the entirety of everything I've learned the past 5 years, all compiled up into a document, my full strategy, and I'm going to send you that straight to my inbox. But here's the thing, my current clients will not be very happy about this, so just promise me you won't tell them, please. Okay, enough of that. But what you need to do is fill out the link that is in this YouTube video, and I will send you the free guide straight to your inbox. No ifs, ands, or buts. But anyways, good luck, and I will see you on the other side.